Hello, this is Pat Walker at MissionWinners.com. I'm doing a training coaching video for everybody. One of the things I've observed through the years is that when the market starts getting strong, people lose sight of their foundations and they're like, oh, maybe this will work. Oh, well, look at this thing. It's going. Oh, look at that. Oh, I got to do this. I got to do that. And what happens is you literally start losing sight and focus of the foundations that got you in the game for a long period of time and kept you in the game with consistent gains. It's very interesting. The market can quickly turn into an entity that will cause you to lose focus and start ignoring your rules. I've seen it. It's happened to me. And which is really important, why I can't stress enough. Stick with your foundations. Stick with what works over a long time, years, decades. Stick with that and be really careful. It's like, oh man, this is running. They don't have any earnings or sales. It's a takeover stock. I'm going to buy that. Oh, that looks really good. What? All of a sudden, you lose sight of what got you in the game and kept you in the game. I'm going to show you something here. You say, well, Pat, can you quantify what you're saying? Yeah, I can. I'm going to show you this right here. This is from a book called 40 Great Stock Market Winners. And the points are this. Point 2, 87% of the stocks that made huge moves. And I'm not talking like, oh, these stocks were up 10% for the quarter. No, massive moves. And by the way, no low price stocks either, okay? None of that junk. 87% of them had earnings up 30% or higher. 71% of them had earnings up 50% or higher in the quarter prior to their move. If you do the averages, folks, what am I saying? Approximately 80% of these stocks had earnings up 40% or higher. 8 out of 10 had earnings up 40% or higher before they broke out. Just chew on that for a bit. It's like, well, those are pretty good odds. Would you go to the casino when odds are 8 out of 10? I think you would. By the way, the market's not a casino. Some people turn it into a casino. Don't do that. 86% of these stocks, basically almost 9 out of 10, had sales up 30% or higher. 63% of them had sales up 50% or higher in the quarter prior to their move. Do the math. Basically, 70% of these stocks had sales up 40% or higher. 40% or higher before they broke out. So combine these variables and say, well, gosh, I guess I could look for stocks that have earnings up 40% or higher or sales up on average 45% or higher for 2 quarters. Point 9. More than 2/3 of these examples of these leading stocks that made huge moves was the result of the industry move. We can quantify this. Leading groups produce leading stocks. It's a fact. Average relative strength on these stocks before they made their move was 92. Don't buy junk. Buy strength. Buy companies in leading groups that have great earnings and or great sales. They're within 15 to 20% of 52-week highs. They're higher relative strength stocks. All these stocks, 40 of them, had positive earnings estimates. Don't go for junk, go for quality. Last point here. This is a recent article, 2018. Go through here. Don't overlook this important. Historically, winning stocks are found in the top 40 groups. This is from Investors Daily Research. This is great research. So, what am I saying? I'm going to pull this over. I'm going to pull this over. Right here. See this screen? 40% earnings, top 40 groups. Average of 45% sales for the top 40 groups. This screen comes up with 70 stocks. This screen, average sales, comes up with 13 stocks. Here's the Bill O'Neill screen. You combine all these together and you get yourself a great list of stocks to focus on. And I can't stress enough, stick to your rules. The market and the emotion of social media can quickly cause you to lose sight of what can get you in the game and what can keep you in the game. I can't stress it enough. And also, I'll share this with you. A bunch of different internet sites, surfing all the time, looking for the next golden egg. TV, all the hype that's on TV sometimes. Be very careful with it. Another point, not trying to ramble here. If you go to a site and the word ripping is used all the time, that stock is ripping, I would be very careful with that. That is a high emotion word. High emotions are not conducive with good investing. I've been doing this since 1986, and I have found that when I start getting amped up, my performance starts to suffer. Run it like a business. Stick with great companies. And you can say, Pat, what do you mean? I'm talking stocks that have great earnings and or great sales that are in leading industry groups that are near 52-week highs, and preferably have good estimates going forward, like this one right here. Going forward. Focus on those and you will increase your performance. And that's what we do at Mission Winners, is focusing on the best of the best. You say, oh, we might miss something. Yeah, but you know what? I used to coach baseball. Go for the high probability pitch. Well, it's out of the strike zone. Maybe I can hit the ball. No. Hit the spot, hit the sweet spot. And you will improve your results. And you know what else you'll do? You'll A, make more money, and B, you will do it with less stress. Less stress. Can't stress it enough. Anyway, I thank you very much. I hope this helps you. Just take a breath and let's see what happens. Thank you.